Hello, everybody, and welcome to VRIC Media, the most trusted voice in junior mining. My name is Jesse Day, and the Vancouver Resource Investment Conference is coming up January 19th and 20th at the Vancouver Convention Center. We have an incredible lineup of speakers for you guys. Best of all, tickets are free, so get yours by clicking the link in the description below. But in the meantime, of course, we're bringing the VRIC to you with our series of expert online panels. We have a fantastic one lined up for you today. We've got Peter Schiff, the chief economist of Euro-Pacific Asset Management and host of the Peter Schiff Show. And we've got Adrian Day, CEO of Adrian Day Asset Management and editor-in-chief of Global Analyst. We're going to discuss the global economy, Trump's Doge division, is it for real, gold and silver, the metal and the miners, and much more. Gentlemen, it's great to have you both on the show.
Well, thanks for having us.
Yeah, my pleasure. Thanks for inviting us.
Well, let's start with the overall state of the economy, because throughout Biden's term, the administration was telling us everything is great, but meanwhile, global food prices recently hit a 19-month high. Credit card debt in the U.S. is at a record high of over $5 trillion. People are starting to borrow money to pay for basic necessities. Government debt continues to grow at an untenable pace. I'm wondering what your thoughts are on the current state of the U.S. economy and how long this can keep getting kicked down the road. Adrian, I'll start with you.
Oh, gosh. Okay. Well, you mentioned a few of the problems. I mean, it's quite clear that the U.S. economy, for most people in the U.S., is nowhere near as strong as the government reports are telling us. And, you know, there's a lot of reasons for that. First of all, these are government reports that I think are, in many ways, are misleading, certainly on the consumer price, on inflation. Nobody I know thinks that costs only went up 2.7% last year. I mean, it's just nonsense. But I think the other thing that's important to realize is the government reports are aggregate numbers. And so if you've got 1%, 10%, and I'm not saying this as a socialist, of course, but if you've got some of the people in the economy that are doing extraordinarily well, that distorts the aggregate numbers. So I think it's fair to say that 50% of the people in this country are already in a recession in how their day to day, week to week lives are. So I'll just leave it there. But I mean, one more thing. Sorry. I mean, again, if you look under the hood on a lot of this stuff, whether it's inflation, whether it's retail sales, unemployment, things are just not as strong as they appear. And let me just mention one quick thing, because we could dive into each of those in great detail. But employment, you look at the employment number, the unemployment number a little over 4%, and you look at new jobs creation and say, oh gosh, isn't the jobs market in the US remarkably strong? Well, no, you've got low labor participation rate, which means your denominator is lower, so therefore your unemployment rate is going to look lower. Look at new jobs creation. If you look at the past 12 months, the majority, and this is literal, the majority of new jobs created according to the government are either government jobs or part-time jobs. That's not a healthy jobs market, in my view. So I'll leave it there.
Peter, your thoughts on the current state of the U.S. economy, the numbers being released by the government, and what this all means?
Well, I've never had much faith in the government numbers. The government numbers are more like propaganda. And for some reason, the media, Wall Street tends to, act as if they're legitimate. But, if the economy was really as strong as the government claims and as the media and even Wall Street report, the outcome of the election may have been different. I mean, maybe Kamala would have won. I think the fact that she lost so decisively is not just because she was a flawed candidate, which she was, but the voters just were had enough. They didn't want another 4 years of Biden-Harris. And if things were great, then they would obviously want it to continue. In fact, all the surveys, after the elections, the exit polls, it was all on the economy, whether it was economy or inflation, which is still the economy. That was the number one issue. The economy is only the number one issue when it's bad. When it's good, the voters, look at other issues that are important to them because the economy is good. So it's not an issue. What am I worried about? What do I want to do? But when the economy is bad, it's the economy, stupid. And that's what it was. And that's, one of the reasons I was so confident that Trump was going to win is because I didn't imagine people who were struggling to make ends meet, who were hobbling together a living with 2 or 3 part-time jobs, that were drowning in credit card debt and had no savings, that they were going to vote for 4 more years. They want change. They want somebody to make things better. And Trump was the only one who had a credible promise to do that. Not that he's going to fulfill it, but at least from a voter's perspective, yeah, maybe Trump will do something different. Harris won't. And so that's why it won. But, the economy is bad. We have to start from that reality. We can't keep pretending it's great because, Trump inherited a bad economy, but it's not going to get better. I mean, it may get less worse than it would have got under Harris, but I don't see any substantive change that is really going to alter the trajectory of where we're headed or the nature of this bubble economy that we've been living in.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the 2 most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
Well, speaking of change, President Trump has put together this Department of Government Efficiency with Elon Musk and Vivek Ramaswamy. Here's a quote from CNN. Musk and Ramaswamy will face an immediate math challenge with finding a way to severely slash spending. Would you agree with that? Is this whole thing just a smoke and mirrors show to make American people believe something is going to be done about out of control debt and deficits, government spending? Or do you think their intentions are sincere? Peter, I'll go to you first on this one.
Well, I think Vivek and Musk, I think they're sincere. I don't necessarily know that Trump is. I mean, I think that Trump is trying to put on a show, and it's more form over substance with Trump. And so this helps him look like he is fulfilling a promise to, put Musk in charge of something, even though it's not really a government department. It's a think tank. They just gave it the name of a department to make it sound like it was more official than it actually is. It has no more authority than the Grace Commission. Ronald Reagan really believed in the Grace Commission. It wasn't for him. It wasn't just a show. I mean, he really wanted to cut government. And he was using the Grace Commission as an instrument to do that because, hey, here's a nonpartisan committee. They're going to find things to cut, right? It's not just me, Ronald Reagan. We're going to get some outside business experts to find efficiencies and to get rid of the waste, fraud, abuse. And of course, none of the recommendations were implemented by Congress. And so they may be sincere in what they want to do. I just don't think they're going to accomplish very much. They may make some good recommendations, but I think they have a very slim chance of being acted by Congress. If there's something that Trump could do unilaterally, on his own, maybe they'll have some cuts. But I don't think it will be substantial enough to really move the needle on, the $7 trillion of federal spending that we have right now, and in excess of $2 trillion of debt. And the debts are going to go way up. I mean, it's going to increase. I think the budget deficits under Trump will be more like $3 trillion a year, maybe more. Just the increase in interest payments on the national debt could be well in excess of $1 trillion a year by the time Trump is gone. Maybe, they're not going to even get enough spending cuts to increase the extra interest on the debt, let alone all the entitlements that are growing on autopilot that Trump took off the table. He's not going to cut Social Security. In fact, he's going to increase Social Security because he wants to make the benefits tax-free, which is the same thing as a big increase in the benefits. He won't touch Obamacare, Medicare, Medicaid. He wants to increase defense. Those other entitlements increase on their own. So if you're not going to cut them, they're just going to keep on growing. Debt is going to grow. So the actual part of the budget that's on the table, even if you eliminated everything, you still would have a big budget deficit. But they obviously can't eliminate the entire government. All the discretionary spending isn't going to go to zero. They're not. I mean, maybe they can get rid of 10 or 20% of it. But again, you're talking about a drop in the bucket if they even manage to achieve that, which would be an unprecedented achievement because that's never been done either.
And Adrian, your thoughts? Is Doge a dog and pony show?
Yeah. I mean, fundamentally, I'm skeptical and sort of I'm skeptical of anything to do with government, anything good coming out of government. It's very frustrating to me that all the Republican fiscal hawks tend to keep quiet when it's a Republican in the White House who wants to increase spending. But they become fiscal hawks when the Democrats in the White House. I'll say a couple of things. One thing that the CNN quote, really misunderstands. We're not, and Peter kind of alluded to it, but the whole idea of cutting government spending is not to do away with an entire program or department, although goodness knows there are some we can do away with. But when we say, well, we're not going to touch Social Security, Medicaid, entitlements, defense, or interest on the budget, oh, well, that's 80% of a budget right there. But we're talking about eliminating waste, duplication, and frankly, fraud. There's a lot of fraud in entitlement programs. We know that. Medicare fraud. There's a lot of, even if it's not outright fraud, it comes close to it with government contracts and so on. So if they can eliminate some of the, first of all, fraud, but more importantly, the waste and the duplication in these programs, that would be huge savings in and of itself. Now, two other things I'll say. One is that it's going to, even in the best of circumstances, it's going to take time for the savings to show through. You lay off a government worker, they still get paid for the next 12 months. So the spending hasn't gone down for a while. So it's going to take time for some of these savings to go through. You've got a contract with a government contractor. You have to honor your contract. So again, it's going to take time. The second thing I'll say, though, is, the US, it has to tackle Social Security and entitlements. I mean, we just have to do that. It is ludicrous for every president, one after another, everyone running for president, one after another. I don't think VRIC said this, but everyone else said, oh, we won't touch Social Security. Don't worry about it. You've got to touch Social Security. You've got to reform it. When Social Security was introduced back in the 40s, the average life expectancy of men, and it was only men that were working in those days, was lower than when Social Security actually kicked in. Now, of course, it's 12, 15 years life expectancy after Social Security kicks in. So we've got to reform the program, and we've
also,
got to reform
Adrian,
entitlements.
Yeah, Trump was on Meet the Press the other day, and not only did he take cuts off the table on Social Security, he said he's not even going to touch the retirement age. So, he's completely, abdicating any role in that, even though he's already won the election. He's not even campaigning anymore. He can't have a third term. So you would figure he could at least, try to do something good for the country while he's president. But no, he has no interest in that. He just wants to blow more air into the bubble. And, when it comes to firing these federal workers, the unions, the civil service union, is very difficult to fire people even for cause. So you can't just say, hey, we're trying to be efficient, and so we're eliminating your job. They're protected from that. If you got to move them to another job. You can't kick them off the payroll unless you buy out their employment agreement with severance pay. And maybe you have to give them 2 or 3 years severance for them to quit. But that's gonna, in the short run, that's gonna run up the deficits, government spending. And, we get a Democrat back in the White House in 2028, he just hires all these guys right back, right? So, or whatever. So you can't fire these guys. And when you're talking about trying to make government programs efficient, that's impossible. Government by its nature is inefficient. Efficiency only exists in the private sector because you have the market forces that bring it about. You have people who have their own money at stake, and so they don't want to lose it. They want to, take care of their money, and they're pressured by the market competition. They have to keep costs down to keep prices down, so they don't lose their customers. But the government politicians aren't using their own money. They don't have to worry about losing customers. I posted on X today about the New York subway system that was built privately and operated privately from 1904 to 1940. So for like 36 years, the subway system was all private. When they first introduced it, the fare was a nickel. And 36 years later, when the government took over, it was still a nickel. So the private sector didn't raise prices at all. And since the government took over the running of the subway system, prices are up like 58 times. They've gone from a nickel to $2.90. So, and because they can't be efficient. When it was privately owned, it was very efficient. And so we have to accept the reality that anything we task the government to do, it's going to waste money and be inefficient.
Absolutely. 100%.
That's why we want the government doing as little as possible, which is why what they have to do is eliminate entire agencies and departments. That's the only way to do it, because you're not going to make them efficient. You got to get rid of them. But, Ronald Reagan found out that you can't do that. He tried to get rid of the Department of Energy, the Department of Education, couldn't do that. In fact, the Department of Energy was started by Jimmy Carter, the guy whose job he took. It had barely been in existence, and he couldn't get rid of that. Donald Trump, the one term he had, he added the Space Force. So not only did he not get rid of a department, he added one.
Right.
Well, I want to touch on gold here, because looking at all these issues we've discussed, along with continued geopolitical uncertainty, accelerating global conflict, the debt we've spoken of, this looks like the imperfect environment for gold to thrive. And of course, it's performed very well this year, hitting all-time highs, hovering around that point right now as we speak. How high can gold go here? Are we in the early stages of a longer-term bull market? And there's always that question of gold returning to the monetary system. Do you think that's eventually going to happen? It's said that the US government does the right thing once all other options are exhausted. Could we eventually reach that point where gold must be introduced into the monetary system? Adrian, I'll go to you first on this one.
Oh.
Gosh, well, that's a huge question. Just two quick things. How high can gold go? An awful lot really depends on how low the purchasing power of fiat currencies goes. So that's, I just flip it around. If you tell me where the dollar's going to be in 5 years, I'll tell you where gold's going to be. But in my view, there's absolutely no question that gold is going higher. All of the reasons, different participants have been buying gold over the last 2 years are still in place. Just central banks, buying gold to diversify away from the dollar they need to diversify anyway, but in addition to that, because of weaponization of the dollar, that's not going away. In fact, under Trump, the weaponization of the dollar threatens to be even more aggressive than it has been in the past. We all know about carrot and stick, but I don't think countries like Russia, China, Brazil, Saudi Arabia are going to suddenly reverse their approach because Trump threatens them with high tariffs. On the contrary, it's going to make them want to get out of the dollar and therefore into gold even more rapidly. So anyway, all of the reasons that people have been buying gold are still in place. So, I would just say that gold's going to go higher and it's going to go much higher. How high really depends on what the price of the dollar is. Is gold going to return? I think the idea of a pure gold standard is not feasible at the moment. I'm a great advocate of a gold standard, by the way, and there's so much nonsense talked about, economic conditions under the gold standard. You only have to look at what's happened since the Federal Reserve came in. With a massive bubble in the 20s and deflation and depression in the 30s, a world war to get us out of that, more inflation in the 70s, bubbles and defaults. The Federal Reserve's record is hardly a good one. But the amount of the amount of currency that's been created over the last particularly 50 years, I think just means that we couldn't go back to a pure gold standard in the near term. But will gold play a role? Absolutely. No question.
Yeah.
No question.
Yeah. We, in 1789, with the first Coinage Act, the Constitution ratified, gold was $20 an ounce. And when they created the Federal Reserve in 1913, it was still $20 an ounce. We had no inflation during that time period. In fact, we had falling prices for well over 100 years. We had the Industrial Revolution. We absorbed millions and millions of immigrants into this country under a gold standard. And, we built the strongest economy in the history of the world with a gold standard. So to say that the gold standard didn't work is pure nonsense. I mean, it's worked better than anything we've tried since. You say how high can gold go? I mean, there's no ceiling on gold because there's no floor on the dollar. Since we established the Federal Reserve, the price of gold has gone from $20 to $2,700, almost $2,800 was the high. If you just assume a similar move from here, that takes gold to over $360,000 an ounce. So how long will it take to get there? It just depends on how much quicker we debase the currency. But I think the rate of currency debasement has accelerated dramatically. When this millennia started in 2001, gold was still under 300. And here we are, 20 odd years into it, 23 years, 24 years into it, and, we're 2,700. So gold's rise, I think, is accelerating, and I think it's going to continue to accelerate. But ultimately, I do think that we return to a gold standard because that's the only standard that works. And I think that if the dollar fails, which ultimately it will, I don't see how you just replace it with another fiat currency. I mean, I can see how, you have some of these smaller countries and their fiat currencies collapse and they get wiped out and they dollarize or they peg a new currency to the dollar. Okay, because, we still have some, fiats that are working. But if the king of fiat, if the primary reserve currency collapses, we have runaway inflation, then what do? You tell people, well, just take the euro. It's better. Take the yen. I mean, none of these currencies, are viable as so the only thing that makes sense is real money. And so ultimately, that's where we're going to go. We're going to head back to that. I just don't know exactly the timetable or the path that we get there, but I'm pretty sure that's where we end up.
And do you think the crypto craze has eaten gold's lunch in any sense, in that, capital that could be flowing into gold, perhaps people are putting into Bitcoin now at $100,000 as we're speaking right now? Michael Saylor's come out and said the US should sell all its gold and use it to buy Bitcoin instead, which I found quite comical.
Well,
Peter, I know you have some very strong opinions on both Saylor and Bitcoin, so I'll go to you first with this
well,
question.
you say when all you have is a hammer, everything looks like a nail, right? So all Michael Saylor wants to do is get the price of Bitcoin higher. And so, yes, if the U.S. government were to be dumb enough to sell all of its gold and buy Bitcoin, the price of Bitcoin would go up. I mean, at least while the government was buying. Once it was finished buying, it would come crashing back down. But yeah, I agree. Bitcoin is eating gold's lunch in the PR department. It dominates the media coverage. You probably have 10, 20 times, maybe more coverage of Bitcoin than you do of gold.
Yeah.
You have, the Bitcoin, they just had their big convention in Nashville. Over 20,000 people spoke or attended the conference, major speakers. Adrian and I just got back from the New Orleans conference, the longest running gold conference in the US, maybe 500 attendees. It's tiny compared to the international interest in Bitcoin. Yeah, people are making a tremendous amount of money on paper in Bitcoin. Other people are realizing these gains by selling into mania. And I do think that there are some people who are buying Bitcoin instead of gold. I think most people who are buying Bitcoin wouldn't have bought gold. I think they're buying Bitcoin instead of some other meme stock or other speculative assets. So I think that the money that's going out of gold into Bitcoin isn't, as substantial, although I think that's changed a bit this year ever since the ETFs were launched. I think the ETF buyers, I think more of those guys took their money out of gold stocks and gold ETFs than the typical hodler who has self-custody of his own coin, right? But I think some of the investor money was diverted. And I think that's why we had the big outflows from the gold ETFs, and we had the weakness in the gold stocks. I think that was investors moving money out of gold in Bitcoin. That didn't have much effect on gold. Gold had a huge year anyway, and that's because foreign central banks were buying whatever retail investors were selling. Now, it's hard to say, how much higher gold would have been without that selling, or if the retail investor would have been buying in competition with the central banks. We will never know. But I think on the margin, sure, it's taken some of the wind out of gold's sail. But, I don't expect that to continue. At some point, the Bitcoin bubble is going to pop for good. And as the air comes out, I think, that'll be a positive for gold.
Yep.
Adrian, your thoughts?
You said exactly what I was going to say, Peter. My sense is, so although the typical Bitcoin buyer and the typical gold buyer have, in some ways, or they certainly have an overlap, if we use the Venn diagram that our vice president likes so much. There's a big overlap in their views about, they're anti-fiat, they're anti-Federal Reserve, a little bit anti-government, small government certainly. So in terms of their views and philosophy, there might be an overlap, but I don't think there's a big overlap at all in the personality of the people that buy each asset. In my experience, the typical Bitcoin buyer, and there's many of them on this island where both Peter and I live, they are not gold buyers. They would not have bought gold if they had not bought Bitcoin. They would have bought, as Peter said, meme stocks or the NASDAQ or, micro strategies or something else, but they would not have been gold buyers. And similarly, most of the typical gold buyers, if they didn't buy gold, they would not have bought Bitcoin instead. So I think until recently, and Peter's right about the ETFs, it's been very, very much at the margin, the amount of gold buying that hasn't happened because of Bitcoin. But I'm an optimist. Well, I'm not an optimist by nature, actually. I'm a glass half full kind of person. But if we look at Bitcoin, I mean, I think it's a great positive when Bitcoin eventually collapses, as it will, because I think it's just a tulip bubble mania. When it collapses, where are those people going to put their money? I think some of that's going to flow to gold.
Well, the problem is, though, Adrian, when it collapses, they don't have any money to put anywhere. The money just evaporates because they can't, it's the people who get out before it crashes.
Right.
That, they have money to invest. The people who go down with the ship, they've got nothing left. So that, it just goes to money heaven. That's what's going to happen to most people is, it's just the whole thing is going to vanish.
Yeah.
Well, let's
but
talk
to the
about
extent
silver.
that they
Oh, go ahead.
want to invest, to the extent that they have new money that they didn't lose in Bitcoin, where will they put that money? Yes, some of those people, the real people who believe in the concepts of sound money, and they're libertarians, and they don't trust government, and they're worried about inflation, and they were putting their money into Bitcoin, they'll start putting new money into gold, right? They're not going to be able to get any money out of Bitcoin because that's going to disappear. But as far as the new savings that they have that they might otherwise have used to buy additional Bitcoin, that money could be used to buy gold. So,
and when are people going to start buying silver here? Because obviously quite far off from its all-time highs. It's being called by many people I've spoken to the most undervalued metal on the planet right now. You do have a very loud chorus of people who are harping on about market manipulation and that the true value of silver will never come to light. What are your current thoughts on the silver market and the questions of manipulation through paper contracts on the future market? Peter, I'll go to you first.
yeah, I mean, I don't think it's manipulation. I think the problem that silver's had is the central banks aren't buying it. It's not the type of metal that they want to store. It's the people gold, right? Poor man's gold. And so since the public isn't buying gold or silver, and the central banks are buying gold, that kind of leaves silver, without a lot of buying interest. And so I think that's why it's cheap. But that's also a good opportunity because when the public returns to the silver market, the prices are going to go much higher. And so, and if you look back historically, there's never really been a bull market in gold that silver hasn't, done better. Now that it's been a while since that's been true, but silver outperformed gold in the big run up till 2011 when it got up to $50, and now it's at $30, and gold's at 2,700. So silver is very cheap in terms of gold. And over time, you would expect it to be a lot less cheap. Whether it gets expensive again, we'll see. I mean, it's possible that silver can get to the point where it's expensive with gold. But you'll make a lot of money if it just reverts to the mean. It doesn't have to become expensive, just kind of fairly valued based on the historic relationships between the metals that go back for a long ways. I mean, this is just not new data. You can go back a long time, look at gold versus silver.
Yeah. Jesse, you beg the question, and I think your assumptions are wrong. I mean, silver's up 50% this year. That's not too bad. Silver's doubled over the last 5 years. That's not too bad. So, silver has done well. It's just that I think we in this community, gold bugs and silver bugs are even worse. They're gold, or even better. They're gold bugs on steroids. But we're always expecting more. We're always disappointed. Gold investors and the true silver investors, I've never heard a gold investor say to me, isn't everything wonderful? Gold's up, the stocks are up 25 and 30%. Isn't life good? We're always disappointed. So anyway, I think Peter's answered the question perfectly, but I'll add one thing if I may, and that is on the supply side of silver. We all know the difference between gold and silver on the demand side, but silver is has much more industrial use. But we don't focus enough, I don't think, on the supply side. Most silver production today, about 75% of silver production is byproduct. And a lot of that is small amounts, 10, 12% of a zinc mine or a lead mine. And that's really critical, because what that means is that the supply of silver, and remember, there's not huge above ground stockpiles of silver, unlike gold. So the new supply of silver does not respond to changes in the price of silver, up or down. That's one of the reasons why silver is so much more volatile than gold. If the price of silver goes to $50 or $100 over the next 12 months, the zinc miner in Peru, who earns 10% of his revenue from silver, is not going to say, oh, wonderful, let me build another mine and double my production, right? And so silver does not respond to changes in the price. So, yeah, I mean, I think before this market's over, silver will outperform gold. Yeah.
And you brought up the miners there. Several of them have performed very well. Talk about Agnico Eagle, Kinross Gold has done quite well also. We have seen quite a divergence between those stocks and the two biggest ones, Barrick and Newmont, that have not held up in the eyes of many. And then when we go further down, most investors were believing that the gold stocks were going to act as a levered play on the gold price. And with gold at all-time highs, once again, perhaps that comes into that mindset of the gold and silver bugs of being disappointed more often than not. But people's expectations haven't been met on that side of things when it comes to the miners. Do you think, Adrian, that is an expectation problem, or do you think there will be a higher valuation, particularly when it comes to the juniors as we move forward in this gold bull market?
Yeah, a lot of things there. I mean, one reason is we just have to look at who's been buying gold and why they've been buying gold over the last 2 years. And Peter already mentioned central banks don't buy silver. Well, nor do central banks buy gold stocks. And so if you look at who's been buying, it's primarily up until the summer of this year, it was primarily central banks that were driving the gold price. And then secondarily was Chinese retail buying. And again, Chinese retail buying does not buy Agnico Eagle, let alone do they buy Ajax Exploration. And so the people buying gold were not buying gold stocks. So I think in my view, what I'll call a traditional gold bull market has only just started. It started with the Federal Reserve cutting rates in September. It's only just started. So within the next 6 to 12 months, I'm expecting to see the kind of leverage that we normally get at the beginning of a gold bull market. And you can go back, go back to 2000, go back before that, go back to the 70s. And typically the gold stocks in the first 3 to 6 months will outperform gold by 4, 5, or even tenfold in the beginning. I think we're going to start to see that outperformance. And I'll just add one other thing, and that is that the gold stocks remain unbelievably undervalued on a historical basis. You mentioned Agnico, which is a great company and it's done very well. The stock's done very well. But even right now, Agnico is trading on a price to cash flow that is in the lowest decile of its 40-year history. And typically, when gold goes up, you have multiple expansions. So you expect the multiples, you expect the stocks to get, overvalued, not remain undervalued. Same is true of the other big miners. They are all selling close to their long-term lows in terms of valuation. So, that's going to change.
Yeah, if you look at, the big miners that you mentioned, at Newmont and Barrick Gold, I mean, they're trading at PEs of about 13. So it's not that they don't have earnings and that their earnings haven't grown. It's just that the market doesn't value those earnings. They're trading at huge discounts to the S&P, despite a very positive outlook on the future price of gold that investors apparently don't share. Investors are pessimistic on gold, even though it hits new record highs. In fact, it's at another record high today against the Australian dollar. That was one of the reasons that Newmont got hit pretty hard is they had higher costs on some Australian mines. Well, those costs have gone down a lot since that report because wages are down big in Australia, the Australian dollar dropping sharply as the price of gold rises. In fact, if you look at the two big components to mining now, labor costs and energy, they're both very low. Oil is about as cheap as it's ever been in terms of gold. And so these gold companies are using oil, but they're extracting and selling gold. And you got a big delta there now with oil as cheap as it is. And you know, with the dollar strengthening, that's better for gold companies than when the dollar is falling. I mean, normally when the dollar is strengthening, you know, gold might be coming down. But now you have gold going up and the dollar going up, which is bringing down their local costs because their costs are in Australian dollars or Canadian dollars or South African rand or wherever they're mining, but they're selling in dollars. They're selling gold. So the businesses should be getting better. I think part of the problem is like a VRIC and a Newmont, they've disappointed in their earnings, right? Whatever they were supposed to hit, they missed, even though the earnings were good. Like when VRIC went down, even though it reported record earnings and a huge growth in, you know, year over year, because it wasn't as big a record as people were expecting. And so, you know, whereas a normal company probably would have gone up on those, you know, the bar is so high for these gold stocks because the sentiment is so negative.
Sure.
That if anything isn't perfect, they get killed. And that just shows you that we are in a bear market in these stocks, despite the fact that gold's at 2,700. And look, gold has gone up more than $300 an ounce since July. And the gold mining stocks are flat. They haven't gained anything. You know, gold now is about maybe 2.5% below its all-time record high in dollars. Yet the GDX has to rally like, what, 15, 16% to get back to where it was before Trump was elected?
Right.
So every time gold goes down a little bit, gold stocks get crushed because people are so nervous that, oh, this is the top, gold's going to crash, right? This is the most unloved gold bull market probably in the history of gold bull markets.
Yeah. And as you say, Peter, you know, we're a very important point. We're getting this margin expansion right now with the price of oil staying reasonably low and the commodity currencies, the Australian dollar, Canadian dollar, you know, Brazilian real. Brazilian real hit a new all-time low last, 2 weeks ago. And that makes the margins that these companies have just so much stronger. So everybody focuses on the cost going up, but let's look at the margin. I mean, even for the highest cost producers, if they're all in sustaining costs of 1,400 and gold's at 27, they've got a margin that's almost 100%. It's phenomenal. This year, each quarter so far, as you would expect, you know, the cash flow of the companies has increased. So, you know, gold is the sector that has the highest growth in cash flow of any sector in the U.S. right now, any sector at all.
100% margin. You know, I'd mentioned on my podcast yesterday because I was talking about the health insurance companies, and people think, you know, oh, these are just big greedy companies. You know, their margins are 4%. They don't make much more than supermarkets. So, you know, and look at the kind of PEs those stocks trade at, and they got 4% margin. You're talking about 100% margins on a business, and those margins are going to improve as gold goes higher, which it will.
Yeah. So, I mean, my sense is that you get a good fourth quarter, so you have a full year of increasing cash flows. I think investors just have to start paying attention at some point.
Let's talk about emerging markets for a moment. Where are you currently seeing value when it comes to both emerging markets and just non-US jurisdictions? Are you looking at Argentina, India, China? You know, I was speaking to Jim Rogers the other day. He's heavily invested in Uzbekistan. I don't know if that's on your radar. That's more of a frontier market. What are your thoughts on the emerging markets and where to find value right now? Peter, I'll start with you.
Yeah, we'll leave it to Rogers to find something like Uzbekistan, the investment biker. But, you look, I thought that there was value in emerging markets before Trump was elected, and now there's even more value there because of the rise in the dollar, you know, based on a lot of false expectations of, you know, what the effect of tariffs are going to be on the U.S. economy, the potential for cutting government spending and all that. I think that's put some pressure on the dollar upward, which is undermining these emerging markets. And also the way people think that the tariffs are going to hurt them, right? That Trump is going to tax all these countries and they're going to pay the tariffs, and it's just going to be a huge windfall for the United States at the world's expense. Trump is like, we've been subsidizing these countries, and that subsidy has to stop. We're not going to keep, carrying their dead weight, which is the opposite of what the reality is. But I think the bargains have gotten better, in those emerging markets. But I think the divergence between the U.S. market at record highs and what you're paying to buy U.S. stocks versus what you could be paying to buy emerging markets has never been this wide. And so these stocks are as cheap as they've ever been relative to the U.S. market. And it's not going to stay that way. You're outgrowing the U.S. The U.S. continues to shrink as a percentage of global GDP. The dollar continues to shrink as a percentage of foreign reserves. Those trends are going to continue. They're going to accelerate. And so that's going to be good for emerging markets.
Yeah, I prefer to talk about smaller markets, frankly, because, if you look at what are considered emerging markets now, like Uzbekistan, most American retail investors cannot invest in those markets. I mean,
that's true. Yeah.
Brokers won't do it. So I prefer to talk about smaller markets. And yeah, I mean, it's always a bit dangerous to paint with a broad brush, but I mean, many of these countries are in, very or reasonably strong fiscal conditions. Better than the US, certainly, better than major markets in Europe. Their economies are growing. Global inflation tends to be a positive for emerging markets or small markets. And of course, as Peter mentioned, the valuation discrepancy between the US and smaller markets has never been wider. So we're buying not in the gold fund. I manage Peter's gold fund, but not in the gold fund, obviously, but in the separately managed accounts that I have. We're moving money out of the US and out of Europe, and we have been for the last 12 months, and into smaller markets. And, you can look at markets like Mexico, Brazil. Brazil's a basket case, but the stocks reflect that. We have a lot in Hong Kong and China. Those stocks are just ridiculously undervalued, both on a historical base on, their own metrics, but also compared with other markets around the world. Now, of course, there is a risk there. There's a big fundamental risk. So maybe you don't want to go too overweight. I know, Peter, your emerging markets fund has done very well. They're heavily invested in Hong Kong and China stocks. I mean, they are remarkably undervalued right now.
Yeah, that's why the fund has been underperforming. I mean, recently it had a big pop when those markets rallied, but then they pulled back. But we're long-term investors, and from a long-term perspective, yeah, those stocks are very cheap, and that's why we own them. They've been a drag on performance in recent years, but I expect them to be, a big, driver of performance in future years.
Right.
Well, gentlemen, this has been a fantastic conversation. Thank you both for joining us today. Before I do let you go, Peter, tell us about Euro Pacific Asset Management, the Peter Schiff Show, and anything else you want to direct people to.
Sure. Well, the Peter Schiff Show is just my podcast now that I do on Schiff Radio and on my YouTube channel, and you could listen to it anywhere that there are podcasts. I generally do one or two of them per week. Euro Pacific Asset Management is the asset management company. We have 5 mutual funds under our family. One of them is managed by Adrian, the Euro Pacific Gold Fund. We also have an International Value Fund, a Dividend Payers Fund, a Global Bond Fund, and an Emerging Market Fund. We also handle separately managed accounts, including gold accounts that Adrian also manages, and that's similar to the mutual fund, but in your own separately managed account rather than pooled with other people in a fund. The whole idea behind, or the strategy behind Euro Pacific Asset Management, is to try to get people diversified internationally, to get out of the dollar before the bottom drops out of it, to diversify out of overpriced U.S. stocks to better valued international stocks, particularly stocks that will do well if we go through the type of inflationary collapse that I think is coming, not just stagflation, but kind of an inflationary depression as the dollar ultimately loses its reserve status and America loses that exorbitant privilege, which has been the foundation of our phony standard of living. So I think we're in for a rude awakening, but I think that investors need to not only be cognizant of that, but prepared for that financially. That also includes, we mentioned physical gold. Schiff Gold is my company. And I think if you want to buy gold, you want to buy silver, we got the best prices. You could go to schiffgold.com. You could buy, just fill up a shopping cart and check out, or you could talk to the reps who are very knowledgeable on the products and make sure, you don't overpay for gold and you don't get sidetracked into numismatics or collectibles or proof sets. You just buy real gold as close to the spot price as you can get it.
Great. Well, I'll put links to all of that in the description below. Adrian, tell us about Adrian Day Asset Management and Global Analyst.
Yeah, okay. Well, obviously Peter's already talked a bit about what we do with Euro Pacific. I think in the gold fund, we are very, very, very well positioned for the next year or two, frankly. And, sometimes we have a lot of exploration and junior stocks, and sometimes those things take a long time to sort of come to fruition. And the truth is, you never really know when one of them is going to succeed. But I think we're well positioned with good companies that are in a position to succeed. In my own firm, Adrian Day Asset Management, we have separately managed accounts. They're individualized accounts, so people can decide they want conservative global, but they want extra gold, for example. And that would be a kind of typical account that people ask us for. And they're individually managed. So that's that. And people can find out about the managed accounts as well as the newsletters, adrianday.com.
Great. I'll put that link in the description below as well. Gentlemen, thank you so much once again for coming on the show. It's been a blast, and hopefully we can do it again.
Well, thank you, Jesse, very much.
Sure. Take care.